Welcome to the Daily Brief, where I'll go over the highlights in the market for Friday, October 21st, and then we'll see how things are shaping up, at least for the highlights, for Monday, October 24th. And we had a pretty positive day. Now, it was options expiration, and that can sometimes drive the market a little crazy. We saw a real pickup in volume, and sometimes when we have an up Friday on options expiration, that can lead to a weak Monday. Now, it doesn't always happen that way, and it's not always that cut and dry, but just be aware of that. And we may have actually overdone it a little bit in Friday's session because we saw a 2.75% rise. And so things are a little extreme, at least in the short term. But let's go back and talk about what happened. Right at the open, we did have a higher open, and we got above the daily pivot at 36.86. And then we went up to R1 at 37.16. Once we hit that R1, we started to fall back. We went below the daily pivot, but we did not go negative. We stayed well above the unchanged level. As the day went on, buyers came back in and took prices back up to R1, and we even went above that, but we never got up to R2, which was at 37.66. We never got that high. Going into the close, we did close near the high for the session. We were up 2.37%. I said 2.75. That was incorrect. And volume was above average, which can be expected on options expiration. And the technicals, they're turning more positive, but they're not decidedly positive right now. There's still a lot of negative things that we can fixate on. And so until we get out of this range that we've been in for the last week to week and a half or so, it's really going to be hard to see a lot of conviction behind the market. Are we going to break to the upside, or are things going to show more weakness and break to the downside? Because everybody's still fixated on inflation and interest rates. And there's, of course, the whole list of geopolitical concerns, Russia, Ukraine, a lot of things going on in the UK. Looks like they're going to be voting on a new prime minister in the coming week. So that's kind of interesting things that can bleed over into the US markets. We did have some Fed speak that came out on Friday. In fact, I'll go through some of that. Please be aware, Friday was options expiration, and we saw interest rates coming down in Friday's session. That gave some support to stocks to go higher. Well, if interest rates keep going up, that could put some pressure on stocks. Then there was this Wall Street Journal article that came out by Nick Timiraos, and I have no idea if I'm saying his name right. This seemed to revive this never-ending scenario that the Fed is going to turn more dovish. This would be what, the fifth or sixth time in 2022 that the markets have tried to develop this scenario. And the reason why this person is important is this reporter is considered to be the Fed's preferred source for giving leaks to the press. So what he said in his article, that he thinks that the Fed will raise rates another 75 basis points in November, and that's pretty much what the markets are counting on. But then possibly we'll consider a smaller increase in December. That's what the markets are hanging on to right now. Now, this is not Chairperson Powell. This is not even a Fed person saying this, but this is a reporter that's been used before to leak information. So we don't really know if there's much behind this or not, but it's what made everybody happy on Friday. Then San Francisco, their Fed president, Daly, who's not an FOMC voter, said that she thinks stepping down on the pace of rate increases will preserve market structure. That's just a fancy way of saying if we stop raising interest rates, the market might go up. Then the St. Louis Fed president, Byrd, who we've heard from before, who is a voter on the FOMC, said that he hopes to get a deflationary process going in 2023. That's what the Fed's been trying to do all along. Stop inflation from going higher. If inflation stops and starts coming down, that's deflation. So it's like, tell us something we don't know here. Also, adding that the job market remains strong. That's another reason why the Fed is justifying their continuation of raising interest rates, because the employment situation has remained pretty strong. If we start to see some weakness in that, that may induce the Fed to a more dovish stance. Then all these comments taken together, they gave support to stocks as well as bond prices. So that ended up producing a pretty good day. One thing to be aware of, the Dow came right up to its 50-period simple moving average, and that right now is acting as overhead resistance. And the Dow is actually looking the best on a chart basis currently. It's getting the highest score. We still have the 10 to the 5, the 10 to the 2, the 30 to the 5. Those yield curves remain inverted. The 10-year to the 3-month is still not inverted. It spent one day being inverted, and ever since then has gone back to being more normal. Sentiment is more back to a neutral stance now. We're not showing a lot of fear currently. And we didn't really have any economic reports that came out. There was one later in the day, but the market didn't really pay attention to that. It was like the trade deficit. And then our trend is negative, but it is weakening. It dropped below the moving average, but the ADX is still above 20. All right. So depending on how you use that indicator, you might suggest that we're neutral now. Or if you want to wait until we drop below 20, you might think that we're still in a negative trend. The bias is positive because of the up day that we saw, and momentum, I'm keeping it mixed. We saw some pretty hefty down days, and we've seen some pretty solid up days. The market's just kind of fighting around right now to decide what it wants to do next. Here's our famous World Series indicator, just to give you an update, and this is just a coincidence. There's nothing behind this. Right now, in the NLCS, this is not the World Series. This is just the Championship Series. Philadelphia leads San Diego 2-1. So whoever wins this will go to the World Series. All right, what's our outlook for Monday? We're trying to improve, and I really messed this up in the full-length video, so I changed this sentence in here. Things are trying to improve if there is follow-through buying. That's what we have to see to get us out of this range that we've been in. The Monday after a positive options expiration day can often be weak, so plus, we kind of overdid it on a one-day basis as well. So if we see some weakness in Monday's session, that would not necessarily be surprising. If we do see weakness, it's what's the intensity of that weakness? Is it going to change the whole environment, or is it just a little bit of a pullback? We have the preliminary IHS market manufacturing, both the PMI report and the manufacturing report and the services reports coming out on Monday. And then the whole list of geopolitical events, and any one of these could come to the forefront. Right now, it continues to be inflation and interest rates as far as the stock market is concerned. So we could look at more of a down scenario because there's still a lot of things that are negative right now. We have a lot of headwinds that are really keeping the market from going higher. The technicals are turning more positive, but we need to see follow through for that to continue. So that might ruin your down scenario if you're thinking that we're going to go down. If you see more strength, that could take away this down scenario. We can't really go with the up scenario yet because we have a lot of things that are pointing down. We need to see more buying for that to turn more positive. And unless you're pretty radical with the ADX indicator because it's dropped below the moving average, since it's still above 20, you wouldn't really go with a sideways scenario right now unless you like doing things that way. So our conclusion, the S&P, it's turning positive, but we have to see more follow-through buying. Short term, it's looking better, as is the intermediate term. The long term is still negative, though. We have to get back above the 200-day moving average for that to change. So thank you. Have a wonderful weekend. Please feel free to check out the full-length video. I will also be posting the weekly video update as well as the intermarket analysis update.